Hey traders, Todd Gordon here with tradinganalysis.com. This is going to be your video update for Tuesday, September 29th. And we've been short the market pretty heavily, and we're actually in the last couple of days starting to cover up those shorts, and we even flipped and went long. So let me drop you into the S&P 30-minute chart. We're using Motive Wave software to do our heavy lifting here, and I know there's a lot of stuff here, but I'll kind of walk you through it nice and slow. So we have seen post-Fed on the 17th, when the Fed didn't raise rates and kind of created this debacle, a completed five-wave move down. So despite his bearish, the bearish sentiment that's out there, and rightfully so, at some point selling power has been exhausted and greed will kick in on the shorts and start to cover. And then people who are kind of, are absolutely out of all the positions they want to be have already sold. So at some point, buyers need to step in. So that usually happens after a good five-wave move, and that's exactly what we've seen. We've seen a push down in one, back up in two, drop in three, and there's a lot going on inside of here, and I'm going to show you what's going on inside of there. Straight forward, up and four into fib resistance, then we've just dropped down into fib price and time support. So I think there's a bounce coming. Now, a lot of people ask me in Elliott, like, Todd, well, what about all this price action in here that you didn't label? Well, it's there. I just don't have it shown to keep things clear. But in a good third wave, which is what we're in right there, you need to be able to count 5 smaller waves to confirm it's a good impulse wave. So let me just bring that count in, stretch it out a little bit, and there's a lot going on there. But in this wave 3, you can count a nice first, 1, 2, drop in 3, sideways 4, down in 5. So that confirms that your wave 3 is a good third wave decline. Okay, so let me just hide that, get things clear again. So as I said, we've covered a lot of shorts, and we are actually nibbling on the long side here with our research customers. So we think that this is going to be a B wave rally. It's not going to be the low. I think it's a corrective rally. It's ahead of us. A B wave should typically get to the 50% price retracement, and that would be the 50% price retracement of the Fed September 17th debacle down to the low that we just saw at the open today. Okay, so that should get to about 1947 in price, and in terms of time, we should also do a 50% time retracement. So half the time from Fed to today would be September 30th projected out from today. Okay, so that's what we're looking at in the S&P. I'm also tracking the DAX. Okay, longer term, that was a 30-minute chart. Let's go out to the DAX. It's been a weak market, much like Asia, which has really been under pressure. DAX has as well. This is a daily chart, bigger picture. The 30-minute chart we're just looking at in the S&P was just this leg down, but now we're looking all the way back to late 2014. And what you can see in the DAX is from that October low, come on back, from that October low, we've got 5 waves up, and then we have just done a 3-wave move down. So let me just kind of hide that, okay? So there's your A, there's your B, there's your C. This is the 786 retracement of that late 2014 to the 2015 move up. 786 is kind of your retracement of last resort. Okay, that's your last one that must hold. And a lot of good reversals happen there. So that's at 90.89. On top of that, we have an ABC correction, and you do your typical fib projections of A wave compared to C wave, and then B wave compared to C wave. Those two levels sandwich the 786 as I just described. So there's really good fib support down there. Okay, and if you just want to see how each of the A and C waves break down, they're nice 5-wave moves. This is a diagonal, leading diagonal in A, and then a typical impulse down in C. So DAX actually looks supported here. And again, as much as you want to be short with all the bearish sentiment out there, at some point you got to realize all the natural selling is gone. Shorts who want to be short are already short, and the people who wanted to exit longs have likely already done so. So at this point, there's probably buying pressure coming into the market despite the bearish fundamentals, and that's why technicals most of the time lead fundamentals, okay? So that's that. Keep in mind, we're going to do a webinar. We do it every Wednesday with Motive Wave software, the software I'm using here. That's going to be Wednesday, 8:45 in New York. So I'll link you over to sign up for that. We'll take about 30-45 minutes. We'll go through the key setups. I'll show you some tips and tricks with Motive Wave. Start to make Elliott Wave a little simpler for you. It's a great methodology. It's wonderful. It's one of the best leading indicators out there. A lot of people kind of fear what they don't understand. So Elliott Wave can get a bad name because basically people don't take the time to learn it, and people hate what they can't understand, or they choose not to understand. Everyone can understand it. So we talk about that. All right, guys, so sign up for the webinar. We have some fun. Good luck. I'm doing some counter trend trading with leading indicators like Elliott, but I'm doing so very delicately with tight risk. and we'll see how it goes. All right, good luck, guys. See you at the webinar.